Welcome to Dr. Cindy Speaks, regular musings and reflections on politics, current events. Dr. Cindy Banyai is a mom and small business owner fighting for our water, our health, our community. She's running for the people of Southwest Florida, trying to flip Florida 19 from red to blue. Listen as she speaks truth to power.
Hello, everybody, and welcome. This is Dr. Cindy Speaks, and I'm your host, Dr. Cindy Banyai, and I am joined here today by my friend, Craig Shapiro. Hi, welcome.
How are you, Cindy? Good to see you.
I am, just another day in paradise.
Of course. Here. Southwest Florida.
Absolutely. It's getting hot, too.
It is.
And spring is definitely here. And we have been actually wanting to do this podcast for a while. We have seen so many things happening in the markets, tariffs, different things happening with different countries, with bonds. And my friend Craig here has made quite a name for himself, going online as Wall Street for Bernie, right? And has been somebody who's been able to talk a little bit about the tariffs with a different lens than some folks. So before we jump into that conversation, why don't you tell everybody a little bit about yourself?
Yeah, so I've been on Wall Street for about the last 20 plus years. I've worked at a variety of different large hedge funds, including my own hedge fund. And now I run my own family office, but I also do some financial consulting. And I work for a firm called the Bear Traps Report, where we provide financial research to institutions and to high net worth individuals, family offices. And we also increasingly now are developing a product for the retail community. I'm pretty active on Twitter, pontificating about the markets, the Fed, the Treasury, tariffs, Trump, whatever I could find myself doing. My handle is CES921. So follow me there and, we can get into it.
All right. So that's really what the focus of this podcast is today, because what I've found, and myself having a background in trade and trade policy, general policy, fiscal policy, monetary policy, and the different ways of government interventions can work. One of the things that always has been difficult is a lot of people don't understand all this stuff. So why don't we start right there? What do you see as going on right now?
Right. So what I see is an economy that increasingly works for less and less people. And so I think this has been going on for years, if not decades.
Yeah.
The 1%, the asset owners, homeowners, those with excess cash are doing incredibly well. Yeah. They've been able to grow wealth, fight inflation. Higher interest rates have actually benefited them if they've locked in a low-cost mortgage and they've had money in the bank earning 4, 5, 6%. So they've done great since COVID, and since rates have risen, since inflation has risen, the stock market has risen. Things were good under Biden for them, and things, in theory, were supposed to be great for them under Trump as well.
Theory. That sounds like
we'll get to that point. But increasing, but that has also meant that a larger and larger segment of the population, the working class, the renter class, those without cash in the bank, those that don't have 401ks, have really been squeezed by inflation.
Yeah.
And that was something that really started towards the tail end of the Trump administration. Obviously, got exacerbated through COVID with money printing, with stimulus checks, with PPP loan forgiveness, with a variety of stimulus and deficit spending that went into the economy. And that was run really through the entirety of the Biden administration. And inflation kind of ran rampant, exacerbated by the war in Russia, which hurt energy prices, brought commodity prices. And so the Federal Reserve has acted with an intent to slow the economy down in order to bring down inflation. They've raised interest rates. And so that's semi-worked. They haven't really gone the whole way. They haven't really slayed inflation. We're still running prices north of 2% a year. Their target is 2, running closer to 2.5 to 3 now for the last 12 to 18 months. So they haven't really finished the job. And so you kind of enter 2025 with Trump. And there was general, I'd say, euphoria about Trump coming into office and the policy suite that I think he was talking about from not only Wall Street, but I think for more and people in the working class. I think Trump kind of found himself somehow, not necessarily the
I'm befuddled.
the best arbiter of working class values, but somehow he's been able to pitch a message that resonated with more working class folks. And so I think people were genuinely excited about a regime of lower taxes, of
bring price down, bring costs down. That was one of the main.
Lower prices, lower inflation, fixing the deficits, maybe reducing the size of government.
Yep.
I think immigration, we talked about that too. Something that I think people were interested in closing the border so that so that their jobs would be protected, their wages would be firm. I said lower taxes, lower energy prices, supplies, and deregulation. Right? These are things that markets and citizens were generally excited about, and so the stock market really rallied, in a tremendous way through the end of 2024 and into the beginning of 2025. Bond market was pretty stable. Dollar was very strong, and that people were excited.
They were excited. And so what you're saying is that there was almost like a classic fiscally conservative set of policies that I would say, I'm not even sure if Trump was saying it. I think that there was a lot of assumptions that they were going to happen. I think he definitely campaigned on lower costs, and the tax cuts, and talked about reducing the size of the government. I think we thought it was through deregulation. He had different ideas about what that meant. But those are pretty classically conservative fiscal policies, which I don't agree with for the most part, by the way. Because I am actually, and this is where we'll have some conversations, I am coming from the modern monetary theory camp, where we are not as concerned about the deficit and the debt spending. Now, I will say that in the conversations, it is understood that inflation is a byproduct of some of these government interventions, like we saw with the stimulus and the quantitative easing and things like that. However, that's why we have the interest rate controls in the way that we did. So I'm just going to put that out there because I do want to hear more from Craig. So as you were saying, everybody was very excited. Lots of people were excited. Stock market was going up. There was thoughts that this fiscal conservative policy that Trump was bringing forward was going to happen. And then what? So
the other part of the Trump agenda was, I think, you need to have a twofold understanding. For one, over the last couple of decades, the U.S. manufacturing base, the middle class, has been very much hollowed out. And a byproduct of lax trade laws, China being able to enter the WTO, a variety of other policies which have really allowed the rest of the world to grow trade surpluses at the behest of the United States. And so we've outsourced much of our manufacturing, really all of our manufacturing, to Southeast Asia and to China. And so our manufacturing base has been hollowed out. The second thing on that front was, I think COVID gave us an insight on how ill-prepared America was for potential war and potential embargoes and potential things that could really affect our supply chains. I mean, we couldn't get toilet paper. We couldn't get PPE. We realized we couldn't make medicine here. And then we realized we can't make weapons without semiconductors that come from China. We can't make
without rare earth metals.
We can't make ammunition here. And so I think Trump obviously was, the president for the last year of that. And so I think that was a recognition. So both those things, I think, came together for him and for his team to say, we need to bring back manufacturing to America. It is that's a dog. It is a paramount importance. And we will do really whatever it takes to reshore manufacturing, to bring back manufacturing jobs. And the quickest way to start that process to protect America and to protect American industry was through tariffs. And basically tariffing out the rest of the world from being able to sell products in America cheaply in order to incentivize companies in America to spend money in America to rebuild capacity, to rebuild manufacturing, to rebuild infrastructure. And it would take time, but this was the plan. And in the meantime, we would use those tariff revenues for a variety of things, but importantly to pay down debt, to help balance the budget, to help pay for tax cuts. In theory, this was, I think,
that was the theory.
This was the theory. I think this is what what him and his Treasury Secretary Scott Bessent and the head of the Council of Economic Advisors, Steve Murrin. I think this is Peter Navarro as well on trade. So I think this is conceptually, I think, what they were trying to achieve. And so
let me go ahead and say I agree. I think that was the point. However, there's a couple of things I want to point out. One is that the integrated supply chains around the world were something that was built at the behest of Republicans and U.S.-based multinational corporations. We have fully globally integrated supply chains in the vast majority of our industries. And this was supposed to be coupled with, and has been coupled with, a shift into the service industry and into the R&D in our general economy in the United States. It still is the number one reason for foreign direct investment in this country. And the idea that the other parts of manufacturing would be offshored in other places was something that was very well known. Now, the risk of it had been there. Ross Perot, right, is famously talked about sucking the jobs across the border through NAFTA. And he was right, actually. There was significant policy failures that happened in the Clinton years in terms of helping people who had manufacturing jobs in the U.S. economy retool or be reabsorbed or be supported in any way, shape, or form. And this has led to some of the disgruntlement that you described as well. But the thing that I think is very interesting right now is that trade policy had been largely Republican, got moderate Democratic support, and that's how it ultimately came about. And then now it seems to be abandoned by Republicans as there's a more isolationist look, it's interesting. The other thing that I just wanted to say in response to what you had just said is in terms of just acknowledging that these were decades-long trends. And the idea that a tariff is going to overnight change the way that we've been doing manufacturing for now 20, 30, 40, 50 years is when the outsourcing really started in the 70s, actually. I grew up in Detroit, so we were like smashing Japanese cars through the 80s because of the different competing imports and the way that manufacturing was already at that point starting to change. So I just wanted to throw that in just for context for folks, because it's not an overnight process, right? So pick up back where you were.
Well, first off, what I would say is Trump's not a Republican. Trump's a populist.
Yes.
And Trump has been talking about protecting American jobs, American trade, American manufacturing for decades. I mean, you can look back to some of his I think he got an advertisement in the Times in the late 90s talking about this. So this has always been a thing for him.
I understand that he has loved tariffs for a long time.
And the other thing too is I think in part he has a fairly anachronistic view about what it takes to be a great country. But I would say the trend towards services was something that we embraced here in America.
Yeah.
But I think the COVID experience reminded him and others deep in government that this free trade, this globalist agenda where we outsource everything, we make nothing here, really exposed us in ways that we didn't realize. Yeah. And so need to bring back some manufacturing.
Sure.
The other thing I'd say too is that the experience in fighting in Ukraine, I think has also reminded us that we are maybe not as powerful, or we are maybe not as strong as we thought we were. And we have depleted a lot of our munitions stock by helping to fund wars in defense of Ukraine, sending weapons to Israel. These are things that we're also doing. So we're thinking about our own defense capabilities. We're kind of depleted. So that plus the PPE issue, the medicine issue, we want to bring back pharma medicine. So these are things that we kind of have to do here on our own, build, having steel here, having aluminum here, rare earths here, copper here, right? We need to think about those things. Now, I think that Trump and team during the campaign massaged over this idea that the transition was going to be quick, right? There's no way that the transition could be quick, but you can't get elected by telling people we're going to go do this. It's going to take a while. There's going to be pain, but don't worry, trust us. Things are going to be better in the future. It's a very hard message to say.
I would say that I don't think the pain message came until after the tariffs.
Right.
I will say that it was like all gung ho, bringing American manufacturing back.
Yeah.
Tariffs are awesome. Costs are going to come down. And then afterwards, it started to hedge. It was like, oh, well, this is going to be a little painful.
I don't know if it was necessarily a bait and switch, but look, I mean, it's.
I don't know.
It wasn't necessarily. It wasn't honest, but I still think they're not being honest, because I think that they are underplaying the pain. I think they are underplaying the timeline that it's going to take to actually do these things. I mean, if you one of the scorecards for Trump and this administration so far has been the dollars of capital that are now being invested in the U.S. that weren't previously going to be invested. Apple spending $500 billion, OpenAI and Oracle spending $500 billion, TSM spending $500 billion, and collectively so far in the first however many days we're at, 70 days, $7 trillion, right? Trump likes big round numbers, right? So that's the scorecard that he is judging this policy on. Okay. But the problem is that's $7 trillion. Before we get anything out of the ground, it's going to take years. It's going to take not only even if we deregulate, even if we say here's a rubber stamp to put a plant up tomorrow, it's still going to take planting time, and it's going to be years. And they are downplaying that, and that's but that doesn't mean it's not right to do this. Sure. But they're downplaying the pain that's going to be for the average person while we try to make it.
I wish it was a little bit more thought out, because I do think that there would be more people that would be on board and excited about it if it was like, hey, this is what's going to happen. There are phases and things like that. I think the problem that we have, especially when you're talking about business investment, is that, okay, sure, there are going to be companies that want to have the U.S. market, and they're going to invest in the U.S. market. But that's the instability that has been caused by the back and forth with the tariff is just poison to business planning.
And so he has created an uncertainty problem. Yes, right? We have 100%. Massive business uncertainty, massive consumer uncertainty, because he's created. We start with this Liberation Day, April 2nd. This is going to be this day. And I think it was smart actually to have a concept of Liberation Day. But the way they did it was poor in the end, because they basically said, we're going to spend 60 days from the start of the administration to liberation. We're going to do some work, right? We're going to actually think this through, and then we're going to come up with a plan and roll it out. And that was a smart idea. Like it didn't
seem like that's what happened.
No. So that was a good
60 days, right. And then we're just going to throw some shit on the wall.
Absolutely. So the theory was, we're going to do all this work. We're going to do all this background work. We're going to, on April 2nd, we're going to tell you what we're going to do. And so you as a business, you have you say, okay, on April 2nd, I'm going to know the state of play. Then I can say, okay, I'm going to put that information into my business plan, my model, and see what I'm going to do. And then, maybe I will either invest or I won't, whatever. But first off, on the path to 60 days, what did we do? We tariffed Mexico and Canada because of fentanyl. And that's because Trump was getting itchy, right? He needed to do something. He needed to create headlines. Then we added the extra China tariff on fentanyl. Right. Then we're going to go and we're going to take over the Panama Canal. And then we're going to go take over Greenland. And we're going to do all these things. And so he's creating uncertainty on the path to Liberation Day.
Yes.
Then on the day itself, they come up with this ridiculous formula to put a variety of different reciprocal tariffs on various different countries, different rates based on the trade surpluses and the exports. And it was a quantitative formula. And it
looks like a really cute, first year econ project.
It was. It seemed like it was. And so it belittled the the idea that the administration was doing a lot of work, right?
Right.
So if you thought that they were actually going to be doing a lot of work, they didn't prove that they did a lot of work with this formula. Then the markets kind of started to revolt on back of this.
Yeah.
And so then what they did was they caved and said, you know what, 90-day reprieve for the reciprocal tariffs on every country except for China, which we're going to raise tariffs on China to 125% because China took the initial reciprocal, they put a tariff on us, we're going to back. The problem with that plan is China sells the most to America, is the most important exporter for our supply chains. And this tariff alone is going to destroy the economy within the next 4 to 8 weeks, because we are going to draw down on our inventory stock and no one is ordering. Container volumes are down 50% year over year at the port of Los Angeles and Long Beach. Trucking volumes are plummeting. And so we are unfortunately now heading straight into what almost looks like a COVID level shutdown for the economy.
I heard it was
coming right. And the other problem is with COVID, well, we don't have to go back revisionist history, but one of the things that really helped the economy turbocharge out of COVID was the stimulus, was the checks, was the PPP loans.
Keep people buying.
You know what's not happening this time?
There's no
stimulus checks. There's no money coming. There's no PPP loan. So small businesses that can't afford to import products now will go out of business.
Right.
They can't get credit. They can't get credit extended. They're kind of screwed.
Even
Walmart tried to push back on China and say, you got to take some of it. And China was like, yeah, you're going to take it. So even the biggest, most powerful company in America that buys from China was unable to really negotiate price concessions on these tariffs. So that part of it was asinine. And so what you basically have is continued max uncertainty. So if you would have done it in a proper way with a proper rollout, you could have created a more certain environment and then told people, look, you're going to get through this short-term pain, but the payoff is tax cuts are coming in the fourth quarter. Deregulation is full steam ahead. Supply side reform is full steam ahead. Lower energy prices are already starting. And so trust them. And the border is closed. So you're not going to be able to import labor anymore. So don't fire people because you won't be able to get them back because we're going to be all, this could have been the message. And instead, what we got was 125% tariffs on China, a disaster for the supply chain, a likely imminent recession, and something that now Trump will have to swallow his pride. The narcissist that he is would suggest he's not going to do that easily, if at all. And so we have the problem.
We have a problem. And the one thing I do want to say, and I agree with everything that you said on that, and that's what I see coming because of the amount that we purchased. But I also want to point out the especially with getting China into the WTO and the whole opening of the markets, the idea was not only to have a place for cheaper manufacturing and cheaper goods, but it was to open up the Chinese market to U.S. companies. That was a huge part of it because that's 1 billion consumers, right? 1.3 billion consumers that could potentially buy your goods. And although I would say that, to be fair, that hasn't happened in the way that I think a lot of American companies want, we still sell a lot to China. A lot of agricultural products, in particular, soybeans, for instance. The United States is the #1 soybean producer in the world. China's the #1 soybean consumer in the world. And that stuff is sitting and going to rot and basically not going to be purchased and sold and processed in the way that it had. So we're also looking at more pain domestically than just within the consumer market as well. I want to make sure that we understand that too, that it's back and forth between the US and China. It's not just one way. So we have
the other thing too is that the messaging for tariffs was that the exporting country would pay most of the tariff and that the US consumer really wouldn't pay anything. And the reason that was said is because the exporting country's currency would weaken as part of this. So they'll be eating some of that. and they would take it in some of their margin. And so when they were selling products to America, the end consumer wouldn't feel much of the inflation. In fact, the exact opposite really has happened.
Mm-hmm.
The dollar has depreciated violently
Yep.
since Liberation Day. Now, it did rally into, for the last part of last year into the early part of this year, but subsequently the dollar has gotten incredibly weak.
Yeah.
And part of the reason that the dollar has gotten so weak is that foreigners who own US dollar assets,
Yep.
US treasuries, US stocks are selling. And the reason they're selling is because bonds and stocks are selling. The reason that they're selling is they are concerned about whether the uncertainty.
Yeah.
They're concerned potentially that the U.S. will put taxes on foreign holdings of treasury securities. They also have been told that the U.S. is not going to pay for defense in Europe as much anymore. So the money needs to leave and go. Europe now, Germany is basically passed a bill that they're going to spend a lot of money on defense and infrastructure spending. So there's now a domestic narrative in Europe, in Germany, that says, we can use the money here.
Right.
And there's
retaliation.
And
China's retaliating with the bond
for sure.
market. Yeah.
Sure. So we have an uncertain environment. We have a tariff policy that is not yet doing or what it should be doing, and this idea of pain, which is being downplayed, is about to, I think, smack us in the face very violently and very quickly.
Yeah.
And so the sooner that the administration backs down on these tariffs to China, I think the better. I think, unfortunately, they're dug in their heels a bit here. And there's really, I think the administration believes that they're going to break the back of China. I think what we've learned is that the pain tolerance of China is much higher than the U.S. And so, look, the Trump flinched on the reciprocal tariffs within 5 days of the markets telling him this was a bad idea. China's going to take a lot longer before they flinch, and they have diversified their export base materially. They sell way more now into Southeast Asia, into Europe, and so they are not as much at risk of this protracted trade war as we are. And so I suspect we're going to have to flinch, but if we don't, it could get ugly pretty quickly.
I was actually talking about this online with folks as well. So my PhD is in Asia Pacific Studies, full disclosure. Spent a lot of time working in East Asia with Taiwan and China. It's been I started my career essentially as like a China expert. And one thing I can tell you for sure is that China does not love confrontation, but they are willing, and their people are willing to take more pain in the long run than I think Americans would ever tolerate, first and foremost. And even though I would agree with you that Donald Trump is a narcissist and that he's dug in, and it's very unlikely that he's going to make any decision that's going to make him look bad, the Chinese face concept is even stronger. They will not do anything that will present them as weak at all. And so I think between that and the idea that they don't really care like how poor and bad things get in their country as long as China prevails, I think trying to go toe to toe with China is a bad strategy.
Yeah.
I will say that I'm a little less concerned about the idea of like taking over Taiwan or things like that, because I honestly don't think that that's a huge policy concern right now. I think what China's going to be looking at is whether or not they can take that step to become the global hegemon, and that they've been laying the groundwork for. Like, I don't know that, and this is the conversation I was having online, is that I don't think most Americans have realized the groundwork that China's been laying for 20, 30 years now. They built their own version of USAID where they were investing all over the world. And they were doing it actually with a much stronger business sense than a diplomatic sense as well. So the Belt and Road Initiative around the world has China involved in infrastructure projects in developing countries, building relationships, building soft power, as well as building, telecoms companies and things like that. Infrastructure and telecommunications and high technology businesses. And China's come a long way. Now, they did that with corporate espionage. I'm not going to sugarcoat that, but they've come a long way. And so they're not isolated in the way that they were in the 80s and 90s. And yeah, they could really come out on top. So I don't think that we really have to worry about them doing any type of physical battle or war trying to take over Taiwan, because actually they don't really like that kind of stuff anyway. That's a whole history lesson, but they will absolutely kick our ass economically and like not think twice about it.
I also think that there's a misplaced view about China's manufacturing and what they actually make. They don't make just toys and textiles anymore, right? They are the leading drone manufacturer in the world. They are the leading electric vehicle manufacturer in the world. Yeah. They are high tech manufacturing.
Oh, yeah. Where your iPhone comes from.
In a big way. So the other thing too, to your point about building global capital, Larry Summers was quoted as saying, and he had this conversation with one of the emerging market central bankers and talking about the differences between when America invests and when China invests. And he said, America comes and they give us a lecture. China comes and they build us an airport, right? And so emerging markets have taken notice of the way that they are treated by America versus by China. And so China has been making inroads into a variety of the global South for a very long time.
Yeah.
And so this idea that America and Trump are going to be able to strong arm its own allies to create this wall of protection that boxes China out is naive. I mean, the first meeting that Xi had after reciprocal tariffs, right to Vietnam, they had a huge meeting. Literally, I think it was the day, 1 or 2 days later, they signed like 50 MOUs that really strengthened their relationships. Then he went to Malaysia. And he's been all over Southeast Asia. There's talks of China kind of having negotiations with Japan and Korea. I mean, these are not historically friends in any way, and they're having meetings. So yeah, I think China is looking at this as an opportunity to legitimize.
They can play the good guy.
Exactly.
For once.
And look, I think there's this thought that China has capital controls and no one wants to own the R&D, and no one wants to trade it. But the truth is, if you trade with China and you have excess R&D from that trade, you can go to their gold window and just pull gold out, and it's freely floated. And you don't have to hold R&D ever. If you don't believe in the security, you don't believe in the currency, China doesn't care. Take the goods. If you will have left over, take gold. It's fine. And so they've created this alternative currency system that's away from the dollar. And so, look, I think the dollar will continue to be the global reserve currency as a unit of account in trade for a very long period of time. But increasingly, countries feel like they don't have to store their excess trade balances in dollar assets, in treasuries. And so they can, store in Chinese bonds or in gold or in whatever it is. So, that's a longer term issue for America too, which was on, I think, full display over the course of the last couple of weeks, because we've seen that dollar depreciate. We've seen the bond market start to sell off. And so I think these are things that the administration was not expecting when they anticipated this plan. And so
I kind of knew that. I was going to happen.
We got to deal with that.
So I did have a question, because I know there was something that you and I were talking about a while ago that was related to the bond market and the tariffs. I think it was a theory that you had. Maybe that theory hasn't come about, but you were saying that part of the desire for the tariffs was to balance out the bond market or something like that. Do you recall our conversation to illuminate it for me? Because clearly I don't have all the information.
Well, I don't recall that specifically, but I do. What I do know is the end goal here, I think, is known. We want to bring back manufacturing to America. We want to reduce trade deficits, because it is perceived that trade deficits have led us into this precarious position that we are in now, from a national security point of view, and from the opioid crisis that we had, which is a result of jobs being taken out of Rust Belt cities, and so they're
or the Sacklers.
Them too, but there is a view that that's where we need to get to. The only way to get there is with a materially weaker dollar. The dollar has to violently depreciate in order to make us more competitive on a global scale. And so one of the things that has happened is the trade deficit that we have is balanced by a massive capital account surplus, meaning the U.S. takes in all this extra money, which goes into our equity market, goes into our bond market, goes into the credit markets, and goes to real estate or whatever it is. And so that has actually made the dollar more valuable, higher in price than it otherwise would have been. And so what we need to actually see happen now is for that money to leave, because that will be the way that we actually bring the dollar down.
So that is actually what's happening.
That is so this is starting to happen. And
I mean, do you think that was by design?
I think that if you look back, Steve Moran, who's the architect, one of the architects of this sort of paper in November when he was in the private sector, that went through a variety of different things that the government could do in order to help restore competitiveness and in order to help reduce the trade deficit. And one of the things that had been floated was this idea of potentially taxing foreign capital, and foreign ownership, treasuries, foreign ownership of U.S. securities, dividends. Other countries do this to us. And so this was potentially this idea which could generate revenues and may ultimately force folks to leave. And the reason you want to force folks to leave is because they are part of the reason the dollar has been too strong. And with the dollar being too strong, that's prevented us from kind of having a lot of this manufacturing stay here.
Okay.
So that there is that theory, which I think is accurate and makes sense. Now, the question we have is, as this money starts to leave, how quickly does it leave? And will it create issues for the bond market? Will interest rates rise? And does that create other potential problems for the government's funding? And so,
and frankly, for people, I mean,
and certainly for people.
I think that one of the questions that I've heard discussed around the political circuits as well is that, yes, we probably need to onshore a significant amount of manufacturing, but at what cost? You know, do we really want to devalue the dollar to do that? And is that really what we want? Because that's the other part that we have with the workforce issues, and why immigration actually plays into this is because a significant portion of our workforce does not want to work in manufacturing and hard labor jobs. We've had increased, education, and folks who have a college degree are not necessarily want to go work in a pressing plant. So there's a question about, okay, maybe there's strategically reasons that we want to do this, but is it good to look back kind of thing? Like, is it good to look back and say we need more manufacturing?
Yeah. I mean, I think there is a national security issue that we have. And that we've been exposed to. So now, I think manufacturing currently is 11 or 12% of GDP. It's never going back to 50%, but can it double from here over the course of the next decade? I think that's a reasonable expectation. And if that puts a couple million people into manufacturing jobs, now we also are going to have highly automated, highly robotic factories.
It's not going to bring back
all the jobs at all. But I think it will be very difficult to transition, folks into some of those jobs. But I think the other thing that the immigration policy is doing is, because the demographic trends, and we're losing, to a baby boomer generation that continues to retire, there actually are pockets of labor shortages in various parts of the service sectors, which have been backfilled by immigration, legal or illegal, whatever. We don't have to get into that. But if you close the border, which the government is doing, and that's a policy that Trump was elected on, there will be a shortage of folks coming in that will create opportunities for people to find jobs that maybe they wouldn't have otherwise. Now, you may say, well, Americans don't want to work in the fields. In the farms. Americans don't want to be housekeepers and cleaning staff at hotels. I'm not really sure that's a relevant argument anymore. People need to work in order to make a living. And there's no jobs, I don't think, that are beneath anybody. Why should certain jobs be considered beneath American citizens, right? I mean,
it's not only just that, it's also the fact that immigrants were holding up our population. In terms of the number of children that they were having and things like that. And without immigrants coming into this country, we're actually going to see our actual population. We're going to see our youth population drop. So it's, I mean, I think it's a legitimate demographic issue above them, and not in just like say, oh, it's not that they don't want it. It's that there's a lot of people that are on a college track. We've hollowed out the middle management.
Yep.
Right. And there is no other jobs right now.
Yep.
So people need a job. But if somebody goes through college, it's, you know, they're not going to be looking for a job in the field.
Yeah.
They're just not.
No, look, I mean, so I mean, a couple of things. First, another thing would be if we raise the wages of some of these jobs, which are considered to be not desirable, they become desirable, right? If you start to pay people a proper wage, take that money out of corporate margins, which are at record highs, we would be able to. Some people would say, you know what, I'll take
Maybe.
30. There'll be some.
But I will say that, okay, and I just know this from a significant amount of education and workforce work that I've done, is that, believe it or not, when people are choosing their paths in terms of their education and things like that, how much money they're going to make is a small portion. Okay, is a small portion of what they choose.
Yeah.
Because everybody thinks like, oh, if we tell these kids they can go work, you know, they can become a welder and make $75 an hour, they're going to go want to do it. Turns out people don't want to handle something that can burn them day in and day out and wear heavy equipment.
Yeah.
And they don't want to live that life. They would rather be a clerk at a grocery store.
Yeah.
For $15 an hour, right? And so I don't know. Like I mean, we're talking about. Now we're getting into like, are we going to force people into labor camps?
Well, yeah.
Maybe we are. I don't know what part of the Trump.
We've also sold an ideal, a vision of what a college education should be worth, how much it should cost, and you know this idea that you could graduate college and have a white collar job making, you know, six figures, and unfortunately, many of those jobs are being AI'd away.
Well, they're gone. Yeah, they're gone. They've hollowed out all of them.
We're also, you know, pushing.
They're going to die with the boomers.
We're also pushing by pushing kids into that track where higher education is kind of the be all end all. We haven't necessarily planned for what those jobs are going to look like. I mean, we're not going to need as many lawyers, as many consultants.
We were doing that because we were shifting to a service and a research-based economy. And we've destroyed that with all of the Doge cuts, destroying the research funding that's going to our universities, that's ultimately going to be fed into our companies. That we haven't even touched on, but that's going to be a significantly hindering factor in our growth, in our economy moving forward. So we've tooled, now we have a whole like 2 generations of people who have been told, hey, go into college, get this education, because that's where our economy is going to be. And now we've just set that shit on fire. Well,
we are setting it on fire. And the question I guess we have to ask ourselves is, would it have been set on fire anyway a few years from now?
Because I don't think Joey B was going to set shit on fire.
Well, I agree with that. But what we did see under the Biden administration is the wealth inequality gap get to an even more ridiculous level.
Yes.
And we've seen more and more folks fall into the lower part of the K-shaped economy. Yeah. So,
I don't think that was Biden's fault. Okay.
But I'm
actually Biden, decreased childhood poverty, and these were all government interventions. Actually, the wages have been stagnating since the 70s, and that is not. I mean, government interventions would have helped along the way if we had significantly kept up with increasing the minimum wage, right? They didn't do that. So companies didn't fucking do it. They didn't fucking pay anybody. They kept those wages the same while costs skyrocketed. So there's not to say that there wasn't anything wrong with the economy under Joe Biden or Obama or anybody else. It's that, we were at a point where things were not looking good.
Yeah.
And some people thought the answer was to burn it down. And some people, and this is actually, I think the theme of the last election was, some people wanted to burn it down and some people wanted to build more institutions, right? It was like the two horrible responses. Yeah. It's like, because if we just keep it, if we just burn it all down, it's chaos, and that's kind of where we're at. But if we keep everything the same, then you're talking about poverty and joblessness and people not unable to afford homes. It was
I think it was, this is what happens in fourth terms, right? This is what happens when societies get to this point of wealth inequality and, 99% versus 1%, and economy.
Head start rolling.
No, what's that?
Head start rolling.
Yeah. And so,
like literally.
So we had I think the choice was, like you said, burn it down, try to, restructure it now, where we still, as a country, we're still the global hegemon. We still have power. We can still impart our will on the rest of the world to some degree. And hopefully through that, we build something better, or just keep it going for another 4 years, and we're eventually gonna get there anyway, probably. So let's just get through it now. That's what 52% of the population, I guess, decided. Let's just go through it now. Now,
I don't think people voted for the pain and destruction. I don't think people really.
Well, it's sort of what it wasn't advertised.
I think people were like, yeah, jobs, costs down. And listen, here's the thing. I always say, I understand the attractiveness of Trump. I understand the strong man. And when you feel like you've been screwed and you want somebody to stand up and say, fuck you, right? Like, that's what you want. I get it. I was raised on a strict diet of Rush Limbaugh growing up. So I get it. But I actually don't think people knew what they were going to get. I don't think that people wanted the entire government to be dismantled in 90 days, right? Like, I just think that things are happening in different ways. Now, there may have been part of the plan. There may be some logic and rationale to it, which I understand. But I'm not entirely convinced that everybody said, yes, sign me up for the fucking shit show.
No, I think that's fair. And the chaos that, he's brought to this reality TV presidency is it's a lot. And I think people remember how much it was, how exhausting it was in the first term. And during the first term, we didn't have, as much economic dislocation. We were pre-COVID. The government deficits weren't this big. The government debt wasn't 36 trillion. We weren't as close to, these types of default as we are now. And so the stakes are higher. China's more powerful. The rest of the world is catching up. We just showed that maybe our military prowess is not as great as we thought it was, as Russia's really, has really beaten Ukraine and NATO in this battle, in this war. And that's a sad, frustrating place, to be. So, look, I think we are moving to this America first, America only strategy, because I think we have to. We are otherwise probably bankrupt and broke if we don't start fixing it now. And so
I feel like I think the deficit is another conversation that we have, and why it's not a big deal versus what you think on it.
Yeah.
But let's wrap this up for today, because we're coming up on 15 minutes. So give us some parting thoughts on this. As you've laid out kind of what you see going on, what you think is going to go on, some caveats for the future. I mean, give us some parting words around the company.
Yeah, I think there are positives to how this could play out.
Okay.
I think lowering tax rates, I think deregulation, supply side reform, attracting business investment, building capacity and infrastructure in America is a good thing. Mm-hmm. I think tariffs are a tool to help facilitate that process. However, I think people need to recognize that this transition period from where we are today, in order to how to get to where that better place might be, is going to be very, very difficult, could actually be disastrous, and may actually really rip at the fabric of the society, the dollar, things we take for granted. And so I would advocate people kind of getting their house in order, thinking about their own personal budgets, living within their means, saving to the extent that they can, because there will be opportunities to invest in the future, but only if you have resources to do it. And this period, the next 2 to 3 quarters is going to be very difficult. And so those aren't like uplifting words, but those
buckle up, buttercup.
But those are parting words.
Not uplifting, but yeah. Well, I mean, listen, nobody tunes into the show because they're looking for happy-go-lucky conversation. But I do want to thank you. You provided some really valuable insight. So this has been Craig Shapiro. Where else can people find your information?
Yeah, the best place to find me is on X, Twitter. My handle is CES921.
All right, fantastic. This has been Dr. Cindy Speaks on on Big Mouth Media. Let's see if I can get my little, there we go, banner coming on. So if you enjoyed the show, we would certainly love to have your support. Go to bigmouthmediafl.com and subscribe to the show. That is where you're going to be able to find videos and podcasts just like this. Thanks so much for joining us, and we'll see you next time. Bye-bye.
Thanks for listening to this episode of Dr. Cindy Speaks. If you'd like to learn more about her, go to cindybanyai.com or connect with her directly at vote@cindybanyai.com. We love connecting with people.